All right, welcome to the weekend video. This is Enda here from bullwaves.org, and as usual, I'm going to go through the markets from an Elliott wave perspective. And if you like that, stick around. Okay, this is the homepage of the website. Check out bullwaves.org if you like what I do. Join up, and you'll have nightly Elliott wave analysis in the members area of the website. Okay, let's get on to the show. Okay. Let's get back here. We'll start with the FX market, the dollar FX market. So finally, after weeks and weeks and weeks of looking for a top to form here, we finally have a turn down into wave C. Okay, so the pattern so far I think is pretty impulsive. It's we're looking at 5 waves down off the top of wave B, and I think the initial target at 105 is probably quite reasonable now, but I think we'll probably go lower given the extent of the initial decline. But I'm still looking between 105 and 102, maybe a bit lower. We'll see how it goes. 50% retracement would bring us back to 102, so there's nothing really out of the ordinary or outlandish about saying that. Okay, so let's get into the hourly count. Here is the 5-wave pattern lower in wave 1, and this will be wave 1 of C. So I think we're pretty close to done here. The initial decline in wave 1 has retraced most of the rally in wave C. So you can see that diagonal pattern there began at 107.13. So the 5-wave decline here, obviously much more impulsive looking than the previous rally. Yes, that rally took from the low in March, so the 24th of March, into the 4th and the 5th of May. So over a month to go, the same amount that we've declined in a week and a half. So initially, so far so good, I think. But I'm stumbling over my own tongue here, but without saying too much, I think we've completed 5 waves down. And I think we'll probably look for a second wave retracement higher over the next few days. Initial target, previous wave 4, probably about 109, between 109 and 109.50 probably. That'll give us enough, as long as it's corrective. It needs to be a corrective pattern higher in 3 waves. That'll confirm wave 2, and then we'll look for a more sustained decline in wave 3, probably the week after next. So next week, I think we'll focus on building a corrective lower high in wave 2, and the following week then look for wave 3 down again. So overall, we're still working our way lower in 5 waves. Next week, a little consolidation, I think, in wave 2. Okay, here is the 4-hour count in cable. Looking for an A wave down. So it could be 5, it could be 3 waves. I don't particularly know, but the initial decline and the continuation this week is it's encouraging. Let's say it looks like we've got a it looks like we've got the beginnings of wave B underway now, and this B wave here, I'm looking for a decline probably back towards 114, maybe a bit lower. It depends on how the pattern goes, but about 114 is where I'm looking right now. We'll see how it develops. But wave A down, I think, should probably retrace back into the mid-range of this correction again, so probably back towards 121 or so. I've got the hourly count here, and I'll show you what I'm looking at. Now, I could update this. I probably should actually up the degree of the wave count here. I think it depends on how it goes today, I suppose. This is, let's call this a viable alternate for the initial decline. So it could be wave 1 in blue, wave 2 in blue, and then we could be working on wave 1 in pink, wave 2 in pink, and then 1 and 2. So a series of 1-2s, very possible here also. It doesn't rule out the count that I'm working on or that I have right now, but I think it's worthwhile just keeping that in mind now that it's come to mind. So I'm going to pop this in as an alternate. Anyway, Suffice to say, either or, whichever pattern is actually correct here, I think we should be heading lower in a third wave and continue lower today, probably Monday and maybe into Tuesday as well as we complete this 5-wave pattern lower in wave 1. And if the alternate count is correct, then we'll be completing 5 waves down in wave 3. So it's kind of much of a muchness, I think. This pattern should continue lower. I'm looking for about 121, let's say, for wave A to complete. So, maybe the alternate pattern is actually, more fitting here, given the target for wave A. But anyway, I'm rambling a bit here now. Call me out when I start rambling. Cable's turning lower. The cable is definitely, the action is more fitting as an impulsive pattern lower in wave A. That'll be wave A in green. Go to the 4-hour count again. So that'll be wave A here in green. This wave A can also come down in 3 waves. So there's no. It really depends on, let's say, how the action starts turning. If we get down towards 121 again, it depends on how, let's say, the consolidation comes. That will determine, let's say, the initial decline into wave A. So far so good. Next week, looking for more declines. And then I suppose at the end of next week, I'll be able to put a finer point on the initial pattern into wave A. Okay, so let's move on. Dollar yen. Dollar yen has turned bullish. I think I was talking about this last week. I was suggesting that if the market actually rallied and broke out above wave 1 again, then we'd switch right back to the bullish count. So here we are, right back to the bullish count again. If we are rallying in a third of a third wave now, then you can say sayonara to let's say you can say sayonara to the dollar is dying tirade that we've been under for the last 6 months or so. Well, the dollar was, everybody's dumping the dollar, everybody hates the dollar again, and every single headline about the dollar over the last 6 months has been just tiring, and been just it's just been sad actually to see that people could be so undiscerning in their points of view. But anyway, that's the media. I mean, the media is going to have, it just swings. It's a pendulum. The media swings from one end to the other all the time. Anyway, when we get to the top of wave 3 here in red, then it'll be like King Dollar again, and no one can beat the dollar. And that's exactly when it'll turn down into wave 4 again. So anyway, if we are actually rallying wave 3 of 3 now, then we should see a solid 5-wave pattern. I think probably back above 143, 144, somewhere up around that, maybe even higher. Go to the hourly count here, and I'll show you what I'm thinking here. If this is wave 1 in green, and that's wave 2 in green, then we have wave 1, 2, 3, and then we'll get 4 and 5. That'll be wave 1 of 3 of 3. So this is a developing 5-wave pattern. Depending on how the action goes, if we don't get a reasonable correction lower again, back towards 136, 135 again, then I'll probably have to up this count again. But for the moment, it looks like we're working higher in 5 waves in wave 1 in blue. And then next week will be overall, let's say, sideways to flat as we complete wave 1 and go down to wave 2. So watch this pattern, watch this space for the next 2 weeks. I think we will turn up hard into wave 3 of 3 of 3. Okay. This is the Dow. The declines this week did not materialize into an impulsive pattern. I think, though, we are still correcting sideways in a second wave. So at the moment, this is what I'm working with. Wave 1 and wave 2. And I think we'll probably run a bit higher today. If we get a double top here to a lower high, about 133, or forgive me, 33,800. I think that will be enough to complete wave 2, and then we can head lower into wave 3. Probably unobstructed next week. let's get to the hourly count and I'll show you what I'm thinking here. This has been the pattern in development today, or this week, let's say. The decline in wave B was suitably, let's say, convoluted, especially towards this, the beginning of this week. We just chopped around and went nowhere, so that kind of suggested a triangle. So we have a complex correction lower in wave B, and then we're running higher in 5 waves in wave C. Now, if this is a running flat correction, then wave C will complete today and we'll head lower. But if it's not, if it's a normal, 3-wave flat, it's complex flat, nonetheless, but a 3-wave flat should hit about 33,800 again and then head lower into wave 3. So looking at that wave A high at 33,780 as a, let's say, a resistance, a target for wave C, that'll complete 3 waves up in wave 2, and then we'll head lower into wave 3 next week. So we've got a bit of work to do today, and then hopefully early next week we look for a turn down into wave 3 again. This correction lower in wave B here kind of threw me, I suppose, late last week, but it did towards about Tuesday this week. It really kind of showed itself as a correction, and we did complete a higher low, very slight higher low, and we headed higher again. So so far so good. Still working on that possible second wave before heading lower into wave 3 next week. Okay. Let's see, and we will see how that pattern develops on Monday. If we top out in wave C, join the website. If you want nightly updates, you'll see how this pattern develops, and we will be able to track wave 3 of 1 together. Okay, let's get on to gold. It's a 4-hour count in gold. This week we have, I think we've, if not confirmed, we're definitely leaning heavily in favor of this this wave count now, this bearish count now. The initial decline off the top can be viewed in both an impulsive 5-wave pattern or a 3-wave pattern. So it all depends on how, let's see if we get a larger count here. It all depends on how this A wave down actually forms. So it can be like any A wave, it can be a 3-wave pattern or a 5-wave pattern. So initially, it's always going to be walking a tightrope here to see how pattern actually develops. But we know, I think, from the action this week that at least the bias has turned lower. We're definitely starting to see a more constructive downside pattern. So I don't think I have to convince you so much anymore that we are looking lower for at least a medium term, probably towards about. I'm looking at about below 1800 anyway. Below 1800 anyway. Maybe as low as 1700 in wave 2. But for the moment, I think we're working on 3 waves down, possibly 3, 5. We don't know yet. Working on an initial decline into wave A that should probably retrace back towards maybe 1850 again before turning higher in wave B. Watch that space. About 1850, breaking 1900, 1850 would be kind of ideal for this initial pattern to complete. Now, early next week, I think we'll probably be able to nail down let's say by midweek next week, we should be able to nail down what form that initial A wave is taking. So it really depends on how the corrective action forms, probably early next week, and that will kind of decide whether this is 3 waves down or 5 waves down. Probably leaning towards 3 waves down right now, but if that's the case tonight, then I will update this wave count. But so far so good. We're starting to punch through the previous corrective, let's say, consolidation levels here. 1976 and 1949, 2 great years, eh? But we are making progress that way, and I think we'll just have to let this pattern develop and see how wave A forms over the next few weeks. But it does suggest that into the summertime, we will continue to work lower, probably towards the middle of the summer, maybe about July or something like that. Well, what is that actually? Yeah, but towards July, maybe the middle of July, if we start hitting 1750 around the middle of July, I think that'll be a time to start looking for a significant low. Okay, let's see how that goes next week. Crude oil. Now, the 4-hour count in crude oil has kind of been hanging in stasis this week. We don't know. We don't know whether wave 2 is done or whether we are actually moving lower in wave 3 yet. Come back here. The pattern is really holding, or the action is holding its cards close to its chest. If the alternate is correct for wave 2, then we will probably run higher towards, the high 70s next week. That'll create a larger ABC pattern higher in wave 2, and then we'd look the following week for a decline in wave 3. If we go to the hourly count here, you can see what I'm working with at the moment. Here's the alternate count, wave 2. I'll probably move that up a bit. If we did actually break above 75, that would bring us to a 62% retracement of the initial decline. That would be satisfactory for that alternate count, I think, as well. And you can see that ABC possibility here. But anyway, for the moment, we still have the main count underway. It hasn't been ruled out at all. We have an initial impulsive decline, probably wave 1, and 3 waves up, solid 3-wave pattern higher to a small lower high in wave 2. So possible 1, 2. We need confirmation on that today, I think. If we don't turn down today, then I'll probably switch to the alternate. I'll be happy doing that. I'm not wedded to either of these at the moment. The pattern is definitely undecided at the moment. If we break lower, let's say if we break $70 again, I'll be pretty much decided on the main wave count. But if this wave 2 high breaks, if we break 73.50, let's say again today, then I think that will trigger the alternate count. Okay, let's move on. Long term, both counts are bearish, but short term, I suppose the alternate would allow for a little bit higher in this second wave. Let's move on. The S&P. 4-hour count in the S&P, we actually made a new high this week, so the count is slightly different to Dow, but nonetheless, we're very, very long in the tooth here. This C wave is pretty much cooked. You can see the consolidation that happened over the last month was part of a 3rd wave top, 4th wave correction, and now we're moving higher into that final 5th wave. You can view that 3rd and 4th wave in a couple of different ways, but at the moment I'm viewing it as an expanded flat correction. So it's 3 down in A, 3 up in B, and then 1, 2, 3, 4, 5 ending diagonal wave C, and now we're heading higher in wave 5. So it looks like we have 5 waves up complete in wave 5 of C of 2. Last night I was saying, right, tonight, this count is done, or this pattern is done. I'd hope that's true. I'm not, again, I can't tell the future, but I can see a complete pattern. I would be pretty happy to turn hard bearish if we break 4100 again early next week. So let's see how that goes today. Okay, if everybody is suddenly looking at, the Fed is going to, get how would you call it, accommodative again, start cutting rates again, and suddenly, we go off to the moon again. You gotta temper that view with the actual reality of what's happening here. The market has tracked higher since the October lows last year. So you're talking about a 6-month run higher now, and we're at the highs of that 6-month run higher. And all the time, the Fed has been hiking rates. So if you're using that logic as a bullish argument, then you have to explain what's happened over the last 6 months. If hiking rates has led to a rising market, which is exactly what's happened, then cutting rates with that, let's say, paradigm, viewing the market in that paradigm, cutting rates again should lead to a falling market, should it not? So you can't have your cake and eat it there. That's basically what I'm saying here. I think this pattern is done. Roll over Beethoven. This is about to go down and probably go down hard. So let's see how the pattern goes next week. Here's silver, the 4-hour count in silver. I think we've probably come far enough this week to suggest that wave A of 2 is done. I'll actually give a run over the couple of alternates here today as well. But as for the main count, I think we've probably got wave A of 2 done. Maybe if we track higher, say back to about 24.50 again next week, maybe even 25 in 3 waves, then that'll be wave B done, and then we'll move lower again in wave C. So overall, I'm looking for a solid 3-wave pattern lower in wave 2, and then again, this is probably going to take us into late June to maybe even August or July. At this point, it's going to be a bit of a drag lower. The previous correction in wave 4 took at least almost 2 months to do. So we're gonna be about 2 months here again going lower. So let's see. Oh, sorry, that was wave 2. Let's see how this tracks next week. If we start, consolidating, moving higher correctively, that will suggest that wave B is underway. So if we go to the hourly count here in silver, you can see I've traced out 5 waves down in wave A, and last night we were looking for the beginning of wave A of B. So looking for 3 waves up in wave B over the next week or so, 2 weeks, 3 weeks, God knows how long wave B will go on. It's going to be probably a painful trade over the next few weeks if this pattern is correct. Now, I think I should also state that there is this horrible, well, not horrible, not unrealistic, let's say, alternate count here for silver. And that not unrealistic alternate count is hinging on a pretty solid pattern also. So 3 waves down. Just forget the labeling here for the moment. Off the let's say the January 2021 highs, we've got 3 waves down in an initial move. Now off the August lows last year, we've got 3 waves up. So we've got 3 waves down and 3 waves up. That took 18 months or more to bottom out in silver, and this has taken 9 months to go higher or more. Actually, probably closer to 10 months now. So 18 months down, 10 months up. And what have we retraced, let's say, so far? This is all in the context of this alternate count here. So at this point, we have retraced. Let me get this Fibonacci grid in place here. We've retraced above 62% of the previous decline. So we popped above 62% of the previous decline, and now we're starting to move lower again. So in terms of an alternate view here, just for pig iron, I think we should look at this. This could be 3 down in wave A. This could be 3 up in wave B. And this could be the beginning of a 5-wave decline in wave C. If that's the case, then I think we're probably heading down towards $15 again, maybe even lower, maybe 14. Now this is not even my preferred alternate count. This is probably the second preferred count, but it's not unlikely. It's not ruled out at all. I think this is a possible scenario here that you must keep in mind, especially if we continue to develop impulsively off the most recent highs. So just keep that in mind. I'm going to keep this account is continually on the back burner here, on the sideline, on the shelf. Just keep one eye on it as this correction develops. So that's all I'll say on that one. And by the way, if we do get a significant deflation in the economy, which is underway, whether you want to believe it or not, it's actually ongoing right now. And I've been updating people on the website, subscribers on the website or members on the website, with those charts showing you guys every night. Look what's actually happening here. Look what's happening. There is a deflation. If that deflation takes hold, and I think it will across the wider economy, don't be surprised to see all asset prices and commodity prices go down hard, along with your general unemployment figures or employment figures go down hard, and unemployment lines get longer, and prices in the supermarket and jobs being lost left, right, and center. It's the same thing that happened in 2008. So the lineup is perfect. It is, bang for bang. We're right there with what happened in 08. So, and this time it's going to be much worse, I think. So just keep that in mind. Okay, let's move on. I think this is the account I'm operating with in Bitcoin here. This 5-wave pattern lower in wave C here is it's still chugging along. It's my main count, and I think we may have hit that top in wave 4 finally. It's been a long sideways move, a long road to nowhere for Bitcoin, but I think we may well be rolling over now at this point. Okay, if we go to the 4-hour count, you can see that 3 waves up. It's either 3 waves up in wave 4, or in terms of a simple 3-wave pattern higher in wave 4, or it's expanded flat correction wave 4 in the main count. So the initial declines off the let's say the April highs have traced out 3 waves down. For the moment, I'm suggesting that it's a series of 1-2 patterns to begin wave 5 down. So on the main count, you can see, actually on the main count, I'm working with a somewhat forgiving, I think, wave count for Bitcoin. It could be viewed as a series of 1-2s, or we have wave 1 down, and we have an expanded flat correction wave 2. I may be willing to switch off that right now, but we'll see. We'll see how it goes. If this count is correct, then we've probably got to run up in towards 30,000 again to complete wave 2, and then a hard reversal into wave 3. If the 1-2 pattern is correct, then we may have maybe a run up to about 28 to complete another smaller degree second wave, and then we've got a hard reversal into wave 3. Either way, there ain't much left in the tank here, and I would use this opportunity to maybe lighten up over the next couple of weeks. Let's move on. FTSE, that initial decline into the March lows has been retraced quite significantly in wave 2. So we've got wave 1 down in green, wave 2 up. And at the moment, off that wave 2 high, which came in at the end of April, we've got a possible wave 1 and ongoing wave 2. So let's get into the hourly count here. We've got that wave 1, 2, 3, 4, 5 decline in wave 1, albeit it's a bit choppy. You could probably view it at best as a trumpet pattern, maybe, or a leading wedge pattern. We'll see how that actually traces out over the next few days. But the action this week has been 3 waves up to a lower high wave 2, and then what could be viewed as a 1-2 pattern again. So we could have a series of 1-2, 1-2s here. If that's the case, then FTSE is an early signal for the wider market that we are in fact rolling over again. So let's get on to the NASDAQ. There's a daily count in NASDAQ. I should update that wave count. Why don't I have that updated daily count? Forgive me. I'm going to update that now while speaking to you. Okay, so we'll call this wave 1 down. Put it on about 20. So wave 1 and 2. You can still see how even though tech stocks have been rallying over the last month or so, you can see that we are pretty much right back at where you would expect a second wave to complete. We have a possible previous fourth wave low. So let's see, actually, on the daily count, I'm actually viewing this as the wave 1 low. So get in there. Wave 1, forgive me now. So we have a 5 waves leading wedge pattern into wave 1 low, and then we've got 3 up in A, probably 3 down in B, and then 1, 2, 3, 4, 5, ending our a wedge pattern in wave C. So it's a 3, 3, 5 flat correction wave 2, and then we are right back at the previous fourth wave high at the 50% retracement, and we've got a significant decline in momentum off this C wave rally. So everything that you want to see in a second wave high is here right now. Here is the 3 wave pattern higher in wave 2. So we've got ABC up in A, wave B down, and then we've got a 1, 2, 3, 4, 5. The wedge pattern, probably an ending diagonal wedge pattern, given the fact that we've got an overlap between the wave 1 high and the wave 4 low. So you would expect a 3 wave pattern into wave 5. I think that's pretty much done now. We've got that. We've filled out that wedge, popped to a new high above that upper trend line. We should end this pattern pretty soon and turn down pretty hard, I think. Here is the wave 3, 4, and 5 of that C wave. So we've got wave 3 top, ABC down in wave 4. Depending on how you want to view it, I mean, this could be wave A, B, C. I'm going to revisit this tonight. We'll see how it goes. I think suffice to say we've popped above the upper trend line. If we are going with the typical ending diagonal pattern, which I probably should, then this would be labeled wave A, B, and C up. So we've got wave A, we've got wave B, and we've got wave C. Okay, so wave C then would be pretty much done right at this point. I think we've extended higher enough, just like in the S&P. I think this will roll over pretty quick. Actually, you know, the NASDAQ and the S&P are rallying on the very same components. So the components, the stocks that are keeping up the S&P, you know, it's like 3% of the actual stocks, or is it even less? It's probably 2% of the actual stocks in the S&P. That's about, what's that, 10 stocks? That's actually keeping the whole market afloat. And it's the same here in the NASDAQ 100. So watch out below. This is not a pretty pattern. And I think that is it. We have come to the end of we've come to the end of this presentation. And as usual, I give you the bad news of the markets, but I give you the good news of eternal life. If you don't know me, I am a follower of the Lord Jesus Christ. He came 2,000 years ago, 1997 years ago, actually. 1993 years ago, forgive me. He died in the year 30 CE, or 30 AD, what I'd like to call it. And he died for my sins because I am a sinner. And because I cannot have fellowship with a holy God with any sin at all, even the slightest, the slightest violation of the law is the breaking of the whole law, um, as the Torah says. You cannot keep. The idea was God gave the law to show you how wicked we are and how we cannot keep the law. It's impossible for us to be holy, so we need someone to take our sin and to pay for it. And that's what Jesus Christ did. He died on the cross in order to pay for our sins. And we get that just like Abraham. We are accounted righteous by belief. Because Abraham believed God and it was accounted to him for righteousness. So that's how we come to righteousness in the Messiah. We believe the Messiah. We believe he died for our sins. And 3 days later he resurrected and he left our sin in the grave. So our sin is paid for, paid in full. And if you believe on the Lord Jesus, you are going to heaven. And that's as simple as it can be. And, people might say, well, that there's not just one way to heaven. God doesn't just make one way. He made many ways. Let me just analogize that for you. If you are a parent and you said to your child, there's a 1,000 ways for you to be good. Go off and be good and do what pleases me. Are you confusing that child or are you making things easy for that child? Or if you said let's say the opposite of that. If you said, little child, here is what I expect of you. This is the one thing I want you to do. Do that, and I'll be very happy. Which is the easier? So God treats us like children. He gives us one thing to do in this life. That is to believe on the Messiah. And everything else will be taken care of. And it's your allegiance to the Messiah that brings you back to God. And that is why Jesus Christ died, paid for your sins. And your allegiance to him gets you out from under the curse of death and sin and into the blessing of life and eternal life. And that's it. I think I've mangled that enough to leave it alone and let you go and discover yourself. So you have to go and search it out, and God will be faithful to you. If you search out these things, God will be faithful to you and show you exactly what he wants. Okay, right. That's it. I'll see you next week if I'm still around. If not, I'll see you in heaven.